So let's talk a little bit about the fundamentals of the stock market. This is the monthly chart on the S&P 500, the SPX. And what I'm highlighting right here is the 5-month trend line, or the 5-month moving average. And as you can see, this is the whole 2019 event. Once the Fed starts to decrease interest rates, you can see that the monthly candles were above, pretty much for the bulk of most of the time, above the 5-month moving average, and the trend line is going straight up. Then you can see it's flattened out, and it started going down for 2022. And as you can see, most of the candles were large down candles, and that's normally the case when you're talking about, correction. They're going to be large candles. So that's I guess, a technical fundamentals, in the sense that during a panic or a fear or a downturn, the candles are going to be bigger than the up candles. And you can see it found some sort of a bottom on October of 2022. Um, and it started going up because of the seasonality of Black Friday and Christmas, right? So now you can see it's sort of above the 5 month moving average. And now we have a little bit of a correction. We are still below the 5 month moving average. So the MACD is essentially green. It is green, but you can treat that as parity if it goes down. So the shorts are going to start to attack this candle, knowing that it is at the 5 month moving average. You also have this significant V, right? This significant V. Now you at I guess, um, a trading range. I call it flat, right? Anytime it does this, it's relatively flat. You're not gonna make you're not gonna make a lot of money chasing or holding options or whatnot. And I know that, so that's why typically during these type of events, and again, I call for a flat here as well, around 4,200. I was expecting a flat. That didn't happen. It went straight up, and I guess that's because of the Fed, right? I was expecting, yeah, it's obviously the Fed. So, um, I don't know. I was thinking it would be flat around right here, 4,200. Instead, it went that down and then off. See, right. So this is an expected flat, right? And that's why yesterday I said first bearish position, first short position, because I knew I could hold a short position knowing that it's flat. So, flat being, if I sell options, which I do for holding long term, if I sell the option, I can hold it, and flat to down is where I'm profitable. And as you can see, if I were to buy the options, the puts where I timed it yesterday here, I could have been stopped out at any point, right? But I didn't, because I sold options. I wasn't going to be down that much. And, doing all this movement, it's very difficult to tell the direction, right? I call it price unpredictability. But what showed me that today was going to be down initially, at least, right? You don't know. There's two sessions, like I say, the morning session and the afternoon session. I knew the morning session was going to be down, and that's why I call reversal Wednesday, um, first bearish position. And I knew that once it started, and here's the other thing, right? Once it gapped up and this was 9:15 was when Jerome Powell started talking. So somewhere, I guess pre-market, he started talking, and he was talking about how the economy is strong, job markets is strong, and how the Feds had to maintain its course. So I knew the way he was saying it sounded relatively bearish or negative, and so I wasn't too worried about this gap up. I knew the longs or the bulls were strong. Throughout the whole day, they were very, very strong, even though it went down, right? So if you look at this, if you look at this, it was very choppy. And throughout this whole event, it was just it was very choppy, and the option spreads, the calls and the puts, they both at time had like 2, 3 basis point off. I mean, I knew something was going on, and when these signatures of chops as well as the spreads and the options, I knew it was going to be relatively bearish or potentially bearish, right? And you can see there's a lot of it still behave technical, and there's chance you can get, like I said, the even numbers, like here 438 reaction, 437 and a half, and of course here 437, or the previous close line. Here's VWAP, daily VWAP, and there's a lot of reaction off of the even numbers, eventually all the way down to 35. So I did cover, I think, somewhere here on my call options that I sold, because I wasn't, I was thinking, well, maybe I could just do a seller puts, hold 2 legs, but I decided just to, I wasn't sure about the afternoon, and I wasn't sure about tomorrow as well, because the other thing about tomorrow that I am kind of concerned about is this number right here, the continuing jobless claim, the initial jobless claims, the 4 weeks average. And the reason why I am concerned is because this trend appeared to be going up, which is positive for the stock market. However, we are in the seasonality month, so therefore, the latest release is November 2nd. That's last week. So this week right here, potentially, I'm not sure if they're gonna lay off that much or jobless claims because of Black Fridays and the Christmas, right? The seasonality. Now it could be next week that's really where it comes in, or it could be this week. So knowing that, I'm not exactly able to predict one way or the other if the jobless claim is going to be, good or bad for the stock market. My thinking is probably going to be, it's probably, well, I don't know, but based on the options, I can tell you based on the options. So based on the option volume, unfortunately, these charts are broken, but that's okay. I can pretty much speak that watching these option volumes, the puts were very strong in the morning, right? And all through, you know, these strike prices, the puts are very strong. And that's a strong indication. So there's some telltale signs that a correction is in place. And that's normally when I say, like, what I was saying on the 1 minute, it's choppy. The spreads on the options were large, and also the put options were heavy. So there was some sell, and of course, Jerome Powell saying what he said was fairly negative, as far as, potentially there was going to be some form of shorts attack today. I did say that it was going to touch the 15. Obviously, once it hit this Fibonacci, and then it recovered, kind of like this doji candle on the 15. Once that happens, it was lost for the day, right? It had to have more. It had to do something like this and then goes down again. Then it will touch the 15-minute trend line. So the second half or the afternoon session, V recovery. So this is a telltale sign, an indication that the longs are very strong. I mean, longs are very strong. I think the only thing that is going to derail this bull market, and I mean, it's quick to say it's a bull market, but in the meantime, it does seem like the bulls are very strong. And the reason why I say that is because this, you know, I think the QQQ had like the biggest, yeah, look at this trend line right here. The slope, right, is so steep. That's like a 45-degree, but the value of, I mean, the actual, um, I guess the actual candles or the price was very strong, right? It's way deviant from the slope. And when it's that far from the slope, that indicates a very bullish strength, right? And here's the Fed, the gap, boom, high of day, close to high of day, up, and it's still relatively where it is right now, which is 4,400. Um, like I say, potentially tomorrow could be another update if this continuing jobless claim is higher, and you can say follow the trend or whatever. But I'm under the impression, if I had to guess, I think this is gonna miss because I think the seasonality of the I guess Black Friday and the Christmas holiday, I'm expecting these numbers, and I know the forecast is pretty high, but I'm expecting the numbers to be lower than expected. So I'm expecting less jobless claim tomorrow. I know that's gonna be opposite of what I normally think. Also, Jerome Powell, who will speak again at 2 p.m. Eastern time. That is another negative. Now, if I'm wrong and this does come in higher than expected, obviously the market is gonna break out of 4,400. It's just gonna run. It's gonna be two session pretty much. It's gonna break out. It's gonna run pretty heavy. And that's the numbers pre-market, right? So pre-market is gonna gap. It's gonna run until you get to this Jerome Powell, which is I guess an hour after the more afternoon session. So this may result in a correction, and depending on how strong, if it's too strong, I don't think it's gonna correct that much. If it's not as strong, um, it's probably going to correct. But the opposite, what my expectation is, if the number miss tomorrow, it's gonna gap down. Well, I don't think it's gonna gap down that much. Like I said, the longs have been very, very strong. So, like I said, I mean today, um, even when Jerome Powell was speaking, there wasn't much of a correction today. And yesterday, right? This right here, normally when it does this sell off, normally the next day would be a gap down. The fact that it gap up on Jerome Powell speaking negatively, and it took all this work, right? This is a lot of work to get it all the way down to here, with a lot of put options and an afternoon reversal, right? This is very bullish condition right now. very bullish. So whatever I say as far as bearish positioning, most likely I'm gonna not be correct initially, right? So even if the jobless claim misses, it may still gap up or be flat and then go up a little bit, but eventually it's gonna go down. So depending on how the number comes out, that is how I'm gonna play it. Now, the other thing about the stock market is it is not continuous, and the setup varies very often, right? So right now is a bullish condition. These are what I call straight line analysis, right? It's pretty much straight line. Now we're at the flat, right? And the flat is the only time where you can be safe playing both longs and puts, right? Like yesterday, I was referring how it was very technical, sort of technical on the 5 minutes. And even though I mistimed the puts that I bought, but I wasn't too worried, right? Now, granted that was, had I done that in any of the previous session right here, I would have lost a lot of money, right? Because we're talking about, like, and this is why I call it straight line analysis, because it's pretty much high of day, gap up and then close at high of day. There is no timing of the buying of the puts, right? It's all about buying calls, buying call options, and even here, right? So we're not at any time close to having what we call straight line analysis on the downside. That would have to come with some significant news, right? The last catalyst was on the Feds. Jerome Powell talking about how they had to maintain posture, and how the Fed has to, if the investors do not believe in the Feds, it will not get to 2%. So the numbers coming up that will be negative, most likely it's going to be Friday, right? So you have Jerome Powell talking, which he's going to be more negative this time around than the previous, right? I think the previous I spoke about um, the previous Fed meeting right here, how I was saying um, it was bullish, right? Because Jerome Powell was saying certain things that was very positive for the stock market. And I'm not going to go over them because it's in the other video and I don't remember the exact details. But the point was he was very positive. Now, this is only, I think, another 30-minute, a short conversation. Um, I don't know. Yeah, look, I don't actually know, but today it was only like 15 minutes. So this may be the longer conversation. Then you got the Fed balance sheet, which I don't know exactly is going to be, any a market catalyst, but it is, let's say what the balance sheet is saying. I don't know. Let me look at that. It is trending down, right? So I mean, I don't. Is that negative? I guess. But anyhow, tomorrow is Friday, and it's not the third week, but it really doesn't matter. At these inflation numbers, I am expecting, and also the consumer expectation, I'm expecting these to be negative for the stock market. So my best hope is for the continuing jobless claims to come in relatively close to expectation, meaning it's not going to be a market mover one way or the other. And that's gonna what that's gonna do is bring in a lot of longs, a lot of bulls, right? These numbers coming in, I guess, at expectation or a little bit above expectation or right at the number expected, will trigger what you call, you know, a blow off top temporarily, I suppose, right? So it's gonna go. I'm expecting it to go above the I guess this this monthly, it's gonna spike up a little bit. So you're gonna see a doji top um as far as for tomorrow, it's going to be above this if the number comes in positive. Um, and then I will probably take my first short position to hold when Jerome Powell talk, um, and in holding with the expectation that the Feds or the inflation numbers, right? And this is the jobless claims. Um, yeah, jobless claims, consumer sentiments, right? And these numbers I'm expecting to come in negative. So that's going to be negative for the stock market. And the inflation numbers, I'm expecting it to be higher than expected, higher than expected. You can see already the previous one is higher than expected, right? So these coming in higher than expected. It should come in higher than expected. I'm telling you, inflation is not tame. This is maybe a big catalyst to selling off after the blow off top of Thursday. You can have somewhat of a little bit of a doji for the afternoon or on Jerome Powell's conversation. And then we're talking about, you know, straight line down, potentially. Maybe not a straight line because, like I said, the longs have been very strong. All you know, they're not gonna give up the ghost so quickly. But that still being said, you know, when they sell off, it's gonna have sell off, and so you're gonna, and especially on option expiration on Friday, I do expect, you know, the numbers. It's gonna be a big, I guess, sell off eventually. No other way to put it, but I'm expecting a good correction or a good down day. Now, it may not be as bad as it sounds, right? Because it's not gonna be one of these huge candles, but it'll be a decent sized candle. Well, I don't know. Every time there's a red candle, seems like it's always big red. So that's just kind of the way it is. Like it's never like a small red. If it's a red, it's gonna be a big red. It's pretty much because of everybody's playing options. There's really big greens and big reds, and like I said, rarely does it even go sideways anymore. It's all mostly straight line analysis. So after tomorrow, so tomorrow will be the last day, or at least in the morning. Tomorrow and early afternoon session will be the last of the sideways, range bound. It's gonna either break out and then or break down for Friday. So that's gonna be a end of day high or end of day low. My expectation is an end of day low because I'm expecting it to fail the 5-month moving average. Um, so yeah, that is some of the technical, those nuances of trading is, and there is so many nuances of trading that it's so easy to forget, and it changes day by day almost. So predicting how the setup is and able to read it, it's almost like reading a poker hand, right? You got to be able to see exactly what the setup of the day was. And I said it yesterday how I was going to pay attention to the option volumes, right? Because it's reversal Wednesday. I was going to pay attention to the spike or the price movement. And like I said, the way it wiggles, or it was very choppy, right? I call it choppy. And also the bid and the ask on the options were relatively large at time, right? At time, wide. So I knew it was gonna be a down day. The writing was on the wall. The afternoon they reversed it. I didn't catch any of this obviously because it was just too tricky for me to see. There's no way I could see that. Even though the call options were kind of decent, but there was no way I could have saw the reversal. But yeah, going forward, that is my expectation, and yeah, so I don't think I will miss this. I don't think I'm gonna miss this analysis for this week. I shouldn't, unless there's something. Let me see. Maybe there is something I'm missing, and there's always something that I don't realize, right? Like maybe there's earnings. No. Let me see what if there's anything tomorrow. No. So earnings are pretty much over, right? Because you pretty much don't have anything left as far as earnings. And looking at just a quick look at the let's look at the some of the things I noticed today, right? The VIX is obviously again dead in the water. So very bullish condition with these type of VIX. But the other thing I noticed was the value fund, right? Value ETF. This is actually, topped out, um, at this point, which is I think Friday of last week, I suppose, was where it topped out. Monday, Tuesday, Wednesday. Yeah, which is kind of strange. And the reason why that is because the retail ETF, right? This kind of went down. So I wonder how Home Depot is doing, right? Not too bad. So this retail ETF, um, I think fundamentally we're gonna have pretty much a housing issue sometimes next year. So, we don't have to worry about it right now, but I'm just mentioning it because I notice it, right? Sometime next year, I think the mortgage rates staying high. Let me look at the bonds. So the bonds are gonna stay high. It's gonna retest the five. There's no now, will it goes down to this level first before it tests the five? Could be, right? Could be. I don't know yet because we're in a bullish seasonality, right? Which is November and December. So whatever downturn I'm predicting, because fundamentally I am a bear by nature. So whatever downturn I am predicting may not last more than a day or two, right? But like these down candles are fairly large, right? So Friday could be a large down day, and then Monday. I wonder what Monday, if I'm missing anything, come Monday of next week. So next week Monday you got. Oh yeah, 1 year inflation data. So some more inflation data. So that's gonna be negative for the stock market as well. So Monday and oil. I wonder if oil is gonna start going up again. Yeah, so potentially oil can go up again, and that's going to be, I guess, negative for the stock market as well. OPEC, so that's gas production. Oh, the CPI is coming out. No, the CPI is. I'm almost certain these CPIs are gonna be. Well, I'm not fairly certain, but I think these CPI is gonna be positive for the stock market. So any downturn is going to be, Friday and Monday. So we're talking about 2 days of red candles. That's it. Just 2 days of some. I guess since all the red candles have been large red, so it has to be. But I hate to say it, but I don't think it's gonna be large red on Monday. It's maybe a large red on Friday, and a small red on Monday, and then we're gonna resume the upward trend, and rightfully so, because um, this V shape needs to have some sort of a correction, and that will be the uh, Friday, Monday. Now, if the data tomorrow is bad, like I said, right, that's why I don't know. I mean, if this comes out, today was Thursday, so if this comes out negative for the stock market, which is if this data is very weak, right? Weak jobless claims. That's gonna be a big down day as well for Thursday. So there's opportunities on the short side. I'm seeing. So I'm leaning short, continuing to lean short because of that. Now I may still play the longs depending on how this look. But with Jerome Powell speaking, um, with the inflation number, and also Monday and the fee of the CPI. I think the CPI will release the estimates on Tuesday. I think this estimate will come out sometime on Monday, right? And if the estimate is a little bit higher than expectation, yeah, that Monday is gonna be really big down day, right? Because right now you don't have the forecast, but if the forecasts come in really negative or higher than if it's like 4.2, that's gonna trigger a down market. So yeah, the other thing is I know this not this Fang, but I might as well look at it since I pulled it up. Yeah, so the Fang stock rebounded, but I know this oh, not this guy, um this 0 day to expiration, this 0 DTE ETF, right? The QQQY. This has been going up, and this is our options play. Surprisingly, right? And it's like I don't know why they got this huge gap down from here to here from October. This is probably some kind of payout. So yeah, I think this is fake. This should be like right here. So they should move this. So these are some type of payout. This is horrible month to month payout, I guess. Yeah. So anytime you go from 1 month to the like December is gonna do another gap down. So that's crazy. I would definitely sell before I guess the transition to the next month. Otherwise, you're gonna lose all this premium because of that monthly payout. But yeah, it's been going up. But you gotta move this point up here to get the continuous. So it's kind of hard to see this, right? Because of these payouts. I wish somehow you can merge these together so that you can kind of see if this is down here, it'd be like so yeah, so I guess it'd be flat if you kind of get rid of these payouts. Um, I'm not gonna calculate it, but if you add this gap and this gap to the up, it'd probably be like right here at 19 and a half. So this fund is relatively flat. Um, so yeah, I think that's all I have for right now. Let me look at what we have on here. Resistance, yeah. Sell now. Market is near a huge drop zone. Huh, interesting. Normally he just guess, but I guess he sees something to say sell now. Most of these people just guess anyway. They don't ever do forward-looking analysis. But yeah, this is what I'm seeing right now.